Sniping trades is not hard, and I will show you why in this video and how it's done. Reversals will be crucial for this video, so this is where we are going to start. Starting from the reversal, from a downtrend into an uptrend. So the downtrend is just a market where the price is repeatedly forming lower lows and lower highs. This formation is visually seen as a price that is decreasing in value or going down. Now, after each break of the previous lows, we have what is called a bearish break of structure. If you're a long viewer of my channel, you probably already know what they are. They basically show that the market broke out of a price structure, and that shows that the market has a high probability of continuing a similar price structure afterwards. And if you don't really understand what is exactly a price structure, let's quickly get into it. So a price structure is basically a presentation of a few sequence of movements that respect a trend. So for example, what you see on the screen is one bearish price structure, which is formed with a swing high, a swing low, a swing high but lower than the previous swing high, so a lower high, then a swing low that is lower than the last swing low. Now what you see on this rectangle is one price structure, and the break of the swing low breaks out of this specific price level and enters into another one, with a possible similar kind of movement because it is broken down below the lows, and lower lows happen during a downtrend. And a bullish price structure is a market that has a swing low, then a swing high, with another swing low, but the new swing low being higher than the last one, so we're getting a swing higher low, and then the swing higher high, which is the one that breaks out of this price level into possible another similar price movement. Why? Because a market where swing highs are being broken to the upside is an uptrend, and this break enters into a new similar market movement. And usually these levels form constantly depending on what trend the market is following. For example, here at the beginning, we've got the lower high with a lower low, and again, lower high, lower low that breaks structure, then once again, and so on. And on the uptrend, the theory is the same, it's just applied to the opposite side. So we have higher highs with higher lows, and each time swing highs break to the upside, it forms a break of structure to eventually continue the trend and form a similar kind of movement once again. Now this whole downside movement is called a downtrend market continuation, and this whole upside movement is called an uptrend market continuation. We've talked on the last video on how to trade the continuations. It's what we have focused on the previous video. On continuations, we wait for the market structure shift to form, which from a downtrend into an uptrend, the market shift happens when the price breaks above the last swing high. So it forms the first swing higher high after a longer time of forming lower highs. And then it pulls back down and ends up forming a higher low, with a higher high that prints the first bullish break of structure. And then we would have looked for a buying setup near the recent swing lows, but after the first break of structure has already printed. But this is not what we are going to focus on this video, and instead, we are going to focus mainly on reversal setups. Now on reversals, we would actually do a similar plan, but instead of looking for the buy setup after the first break of structure has formed, we look for the buy setup after the market shift has formed. This allows a much higher risk to reward, but with the downside of potentially buying too early, because we are basically buying using a lower quality confirmation. Keep in mind that any advantage comes with a disadvantage as well. The disadvantage on this plan is that there are higher chances that the market structure shift would actually be just a liquidity trap and the downtrend can still continue. And to be honest, this is how most of the setups would probably look like, especially when you just start trading reversals. But because of the immense risk to reward potential, 1 or 2 wins can cover even 10 losses. And now in the case where the market turns from an uptrend into a downtrend. So remember this price action that we've talked about earlier. We now care mostly about the recent price action, which is this constant uptrend structure. At some point, the market has to reverse because it can't just go straight up forever. And it does reverse by firstly breaking down the last swing low. This forms the first swing lower low after a longer time of forming swing higher lows. This first break is the bearish market structure shift. In trading reversals, it's this where we put most of our focus, because after seeing the shift being formed, we need to look for a sell entry model. They are usually supply zones and imbalances as well. They should be both situated near the swing highs, and we're looking to sell from that level, this allowing us to potentially get very high risk to reward setups. You can use any entry model you like. You can even create a custom one for yourself. The main point is to sell at the highest price we can get. And then it's just about being patient and handling emotions. A thing where I put a lot of focus on my trading program is building a system that allows this kind of setups and be profitable long-term using them. But more on that later. Now we need to get into the charts and find setups like this one and test them. So let's jump into the first backtest. Starting with a Forex pair. At the very beginning of the price, the market kind of consolidated for a while, and then it started picking up volume and increasing its momentum. That's when a very bullish candle has formed, and this candle has a high chance that it has started a macro uptrend. So let's actually analyze this one. So we've got this swing upwards push, followed by a downside pullback, and an upwards push that break above the highs. So we've got the first higher high, then the pullback forms the higher low, and the break of the high, which is represented with a bullish break of structure. So this is the first price structure of the uptrend after the market's volume started going up. So let's see what's happening next. Based on probabilities, the market should continue the uptrend. So let's analyze what happened next. So after breaking the last high and forming the break of structure, the market started pulling back down, which is just like expected, since after a break of structure, it often happens that we enter in a pullback phase. And then, it has continued to push to the upside, eventually breaking up above the last swing highs once again, so getting another bullish break of structure. Then we enter into a consolidation, with the market moving sideways for a while. And the volume started increasing again, and it has still done a similar price structure of higher highs with higher lows. Now here we would expect a higher high. So it has formed the high. I will clean this chart a bit and also place each break of structure properly. Now after it has formed the last high that I said earlier, we would expect a higher low, a similar price action that it has happened right before. If you observe the previous higher lows, the expectations would be for the market to end its pullback higher than the last one, and it has succeeded to do so. It also broke above the last highs with many large candles. Then it was followed with a downside pullback, and lastly it looks like soon it is about to break above the last highs. Now if the price breaks down below this low, being the swing low, this would be a bearish market structure shift, where we would get a trend reversal, and we will look for a sell setup in that case. And if it holds above the swing low and forms a higher low, and then it breaks above the last high, which forms a bullish break of structure. In this case, we would not look for any setup because the market has continued its trend, and we are looking for reversals instead. So now that it has broken the structure up, we move the market structure shift to the next swing low, so if the market would break below it, we have a high chance of a trend reversal. And bearish momentum started picking up. Looks like we will finally get a break. And we got the break. So now the market has printed the first indication that it could reverse into a downtrend. So now we apply everything that we've learned in the first minutes. So because we got the first market structure shift towards the bearish side, we can now look for a sell entry model near these levels. One of the most clear ones should be somewhere near this candle. Because it is a very large candle, these large candles most of the times create a market imbalance. An imbalance is taken from the lower wick or lower body of the candle previous to the large one, to the upper wick of the candle next to the large one. So this is our first candle. This is the second candle, which is the large candle. And this is the third candle. And we take the connected levels and drag it to the right. And this whole level is our bearish imbalance. The setup positioning on these imbalances are usually a sell short at the bottom of the imbalance, with the stop loss above the imbalance. And for the take profit, we will look to target very high risk to reward ratios. I usually target below the last swing lows, because that would form a bearish break of structure to continue the downtrend. Now we don't know where it will stop, because there are multiple swing lows that can be taken down. But the key point is the risk to reward. I think this one is good enough. The last ones are too high. And now we wait patiently for the market to do its thing. So now we got the position triggered. And couple hours later, it closes as a win. Now here it's interesting because it has moved to the take profit after the closed and open on the next day, but it would still close the position at that price. especially because this is Forex and there is a willing seller and buyer for similar prices, because remember that if we sell and take profit, we need a buyer to close our position. But you won't have liquidity issues on Forex because it's the most liquid market. And the price came back to the take profit anyway, so if there wasn't anyone willing to close our position, now there should be one. Into the next backtest. Here initially we got this market slowly rising up, then a massive bearish candle that drove the market down, but then it nearly instantly reversed back up. This whole move is probably due to high impact news, but we do care about what kind of price action started after. And here, we can see the beginning of a potential uptrending market. If the market would break above the last highs, we will have a break of structure towards the bullish side. This will probably hold an uptrend for a while. And if the market breaks down below the swing lows, we've got the market structure shift, a reversal from an uptrend into a downtrend, and we can look for selling setups after the break. But looks like the first case played out, with the market breaking up the highs. Now we have validated this break of structure, and the uptrend is basically confirmed. In uptrends, what we expect is a pullback that is followed by an upwards push that breaks the last high. Now we don't actually know where the end of the pullback will be, but we know that if the uptrend would respect, the market will form a higher low. So in other words, it should not break below these lows. And if it does break, that is a market structure shift that would allow us to look for a sell setup. So we've got some kind of break, but a very low quality one. Done with a wick, and the next candles don't even manage to close below the zone. I would not consider this as a valid break. For a valid break, we want to see at least one full candle closure below, which we didn't see in here. And more than that, the market became very bullish after those downside wicks. This just says that those wicks were more than likely liquidity sweeps, and nothing that important to change the structure of the swing market. So this market structure shift is still considered as the low level that if it breaks, we might enter into a downtrend. So now we see a price action that is represented by an upside push, a pullback, and another upside push that breaks the last high. So the market simply continued the uptrend, and now because we got a new structural low, the market structure shift switches to being this new low. So now we would get a trend reversal if the market would break down below this level. In the near future, the market repeated a similar price action, essentially a pullback, followed by a push that breaks up the last high. Now again we move the market structure shift to the new swing low. In here we start to see bearish volume into the market, and pay close attention to the swing levels. And I will make sure to mark the important ones. We got here the high, then the pullback forms a low. But this new is higher than the last one. So this is a higher low. Also the new high is higher than the last one. So we got a higher high, but now after the pullback ended, the market pushed to the upside to continue the uptrend. But the upside move got faded down with the price pulling back down. This move breaks below the last lows. This validates a lower high with a lower low, and the first lower high with lower low on an uptrend is a bearish market structure shift. This invalidates the previous one because it has formed a new swing low, and this swing low now actually validated the shift because it is broken down below it. Now, since we have validated the trend shift, we need to identify selling opportunities. They usually come in form of supply zones that are situated near the swing highs. For example, here we got a supply, but this one was already filled, but it doesn't respect our plan. We need to look for a supply after we got the market structure shift, and the supply needs to be closer to the market shift. We can look at the recent price action right on the downside break. We have this up movement and then it rejects to the downside, forming this downtrend structure. As I said, we look for supply zones near the highs, so this would be the closest supply to the structure shift. I take the supply from the last bullish candle before the market started the downside impulse. Some traders consider only the candle that caused the impulse, and some traders consider both candles. This really depends on you. It's your choice. I found that all are pretty similar. And the setup planning is a sell short on the supply, with a stop loss above the supply and the take profit below the lows. We are looking for a higher risk to reward. A 1 to 4 in this case is just enough. And here the position got opened. The price rejected the supply straight down almost to the take profit, and then it bounced up getting closer to the entry level. Quite unfortunate because it was so close to hit that take profit. But not a big problem because shortly after bearish momentum came back into the market, closing this with a win. And if we zoom out and we look for the swing levels, the market actually went to break down both of these lows. So we could have seen a higher risk to reward setup, but I won't risk that much because these setups are not met so often. And you might find that if you target those insanely high ratios, you will get demotivated entering a losing streak. On the gold market in the 30-minute time frame, we started with an initial downtrend, then it pulls back to the upside. This pullback breaks the last swing high, forming a higher high, and the market structure shift towards the bullish side. So now we've got the trend shift pretty early. We would look for a demand near these levels, as close as possible to the break, and there is one small demand here, a demand that already got filled here, and also looks like it is respecting since it's bouncing up from the demand. So we just place the setup planning, a buy order on the demand, stop loss below the demand, and take profit above the highs, but while also having a high risk to reward, around 1 to 4 is great. If the market would respect our plan, it will break upside structure. And it has done it, while also closing with a win. Now we would expect a pullback. Again, we don't know where the low will end, but we assume because it's an uptrend, it should end up higher than the last one. So in other words, the market should not break below the new swing low, because that would form a trend reversal. And if it does, we look for a sell setup. The market continued its uptrend by breaking up above the high, which is exactly what it has done before as well. So we mark the break of structure, and we move the market structure shift to the next swing low. And again, we got a continuation, basically a higher high that breaks upside structure, with a higher low that becomes the new swing low. And now it finally broke below the swing low, with increased selling pressure. So it has validated the market structure shift. And now we would look for a sell setup expecting the market to form a lower high, with a lower low. There is a supply zone which is also the closest one to the break. And we position the setup. Sell on the supply, stop loss above the supply, and take profit below the lows, while also having a higher risk to reward, which is still around 1 to 4. Now here the position got opened. And this looks like it's going to be a loss. Right. This closed with a stop loss. But it's completely fine. Since we have traded 2 setups on this gold chart, we would still end up in profits because of the higher risk to reward. Sometimes it can be frustrating to do the analysis properly, but then we lose the trade. But that's completely fine and expected. Nobody can predict the market to such an extent. So let's move into the next setup. This is the Nasdaq on the 30-minute chart. We can see some sort of uptrending market, with highs being broken up, forming its break of structure towards the bullish side. And we also mark the swing low, because if the market gets to break below this swing low, it would shift into a downtrend, moment where we will look to plan a sell setup. But here, we see that after breaking upside structure that formed a swing high, the market pulled back down, and then continued the bullish momentum by forming a new higher high. So it essentially continued the break of structure bullish formation. And also now we got the potential market shift on the next swing low. The market seems to continue this uptrend. It has more buying pressure compared to weaker sellers, and it gets to break one more high. Now we move the market structure shift into the next level because it has formed a new swing low. And here once again, the more probable move is a break above these highs, since we don't try to predict the reversal, but we just follow the trend and trade against it only when we have the first more significant warning that the market might reverse back down. But in this case, it continued the uptrend by breaking into the new highs. And this continuation and break of structure validates the new swing low, which becomes the next level where if the market would break down, we would look for bearish setups. And if the current highs break up, we move the market shift level to the new swing low. And we basically do this until the market finally breaks down below a swing low. And now it has finally done it, with increased bearish pressure as well. So now we have validated a swing lower low, this being the first indication that the market might come back down. Now to get a great entry, we would look to sell at the highest price we can. That is done by identifying supply zones near the highs, and there is the supply zone. So just as usual, Sell short on the supply, stop loss above the supply, and take profit at around 1 to 4 risk to reward, similar to the previous setups. So it pulled back up and filled the supply and rejected back down, soon closing as a win. If you've come so far into the video, congratulations, because you are more dedicated than most traders and shows you are serious about it. I have my trading program filled with one of the best materials, and I'm confident because I've simplified it so much that anyone can learn, apply, and earn. You can find it on the link in the description. Also, if you liked the video, don't forget to subscribe and feel free to check out the community tab here on YouTube because I post a lot of useful information. Thank you for watching.